Hello and thank you for joining us on Business Incorporated. I am Bisi Adebayo. Coming up on today's show, the Central Bank of Nigeria reports net operating income of 400.4 billion naira for the 2017 financial year, and Ugandan government tells MTN to list locally as a condition for license renewal. Plus, casual dining and coffee chain Java House Africa signs deal to export coffee and tea to China. Well, let's begin with this big news coming from the Central Bank of Nigeria, reporting a net operating income of 400.4 billion naira for the 2017 financial year. That's lower by 38.8% over the 2016 figure of 654.87 billion naira. In its annual report for 2017 released today, the financial regulator says the decline was due to fair value loss on financial instruments held on its books last year. The CBN net income was also sharply lower to 70.17 billion naira at the end of 2017, compared to 104.93 billion naira posted for full year 2016. In the meantime, the regulator says the bank made an aggregate earnings of $250 million, or 77.74 billion naira, from the management of its external reserves in 2017. This figure was 44.2% higher than the 2016 figure of 43.4 billion naira. The increase was due to a steady increase in reserves portfolio, as well as higher income earned on current and repurchase account balances. Over now to the stock market, starting from Africa, where we see mixed numbers at intraday. We're here in Nigeria. The all-share index is still trending lower today as investors continue to take caution over political risk. In South Africa, the index was up 0.79% at intraday, while the EGX30 was 0.33% negative. The Kenyan index closed up 0.13% on Wednesday. And in the Middle East, the Abu Dhabi index continues to shine in early trade in an otherwise lackluster day in the region. All the other indices were in the red as the buy shares were down over 0.5%, while the Qatar index was 1.52% lower at about midday Nigerian time. Saudi Arabia, the region's biggest market, was also down 0.39%. And bourses in Europe climbed higher on Thursday morning following news that China has accepted an invitation from the United States to talk trade late in August. And let's cross over to the Frankfurt Stock Exchange, where Orich Bass is waiting to give us more updates from the market. Orich, it's yet another day in the global upset of trade wars and geopolitics. Well, Turkey seems to have gotten a new ally in Qatar that promises $15 billion in rescue investments. Is this a game-changing news for Turkey's economy and the markets?
I think it's too early to call that a game changer, but it is a confidence giver, and it's alleviating some of the pressure on Turkey and on the lira. $15 billion, that's a lot, and it's we hear going to go into the financial markets, into Turkish banks to shore up the kind of security there. The Qatar Emir was in talks in Ankara yesterday with President Erdogan, and this is what they agreed on. And it's important. Qatar is an ally closely politically and economically of Turkey, but is also a close ally of the United States. So who knows what might emanate from this decision going forth in the conflict between Erdogan and President Trump in the White House. Of course, important for the markets is also an event that will be coming up shortly. Turkey's finance minister Al-Bayrak will be having a telephone conference that he announced earlier in the week. That's to take place very shortly. And we hear that there are about 3,000 participants that have registered for this event. So you can surmise from that a number that practically anyone in the financial world who's involved with Turkey will be on the line, and we could see some very decided reactions once that telephone conference is over. And should it not yield certain results, then probably also a reaction as well.
Still on trade wars now, China says it's ready for talks with the United States, even as news has it that foreign direct investments into China tops nearly $8 billion in July. Is Washington-Beijing talk likely in the near term?
I think so. China has accepted an invite from the United States, and it's to be held, that talk, later in the month. We don't know many details yet, but it's apparently supposed to be on the officials level, senior officials level. That is, no cabinet secretaries or ministers or leaders, Trump or Xi Jinping involved, but certainly people who are familiar with the minutiae, with the details, talking to one another. It's good news for the market, and it's contributing to the markets getting back their composure today.
Now, shares in Italian motorway operator Atlantia have tanked in Milan after the bridge disaster in Genoa. Now, bring us up to speed on how this bridge accident is impacting Italy.
It's the talk in Italy, and it's not only the existence and the fate of the companies involved, but the government has to decide on how it's going to tackle the situation of road, bridge, tunnel safety in Italy. There have been other bridges which have collapsed, less devastatingly so than in this case in Genoa. But the government is apparently weighing three options with respect to Atlantia. It's the parent company of the operator that operated this part of the road and the bridge. And one is revoking the concession for this part of the road that's affected. One is revoking the concession totally, and one option is also fining. And according to the contract that the company has with the government over being able to operate a toll road, apparently the sum that is possible is up to 150 million euros.
Oh, and that's a very sad one. We'll see how this all plays out in coming days. Well, thank you, Orit Bass, for bringing us up to speed with happenings in the European markets.